Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back to TFR for another edition of Investor Stories. On this segment, the experts talk about a startup that failed and the causes of that failure. Here's the segment called Mortems.
On today's special segment, we have Tripp Jones of Encore Capital. Tripp, can you tell us about a portco that failed and why it failed?
You know, it sounds like a humble brag, but it's actually sort of embarrassing. I have yet to have a portfolio company fail. Now, some have underperformed expectations, which actually to me means I'm not doing my job correctly. By definition, I should be taking more risk, which means I have not kind of upped my risk aperture to really aim at the big outcomes. And it's something that I constantly think about over the last few years and has driven me to take more risk. And so I will hopefully have, more failures in the future to tell you about because they'll be mirrored with some gigantic outcomes.
On today's special segment, we have Jonathan Lehr of Workbench. John, can you tell us a story about a portfolio company that failed and why it failed?
So we were in a security company that was doing incredible second order work, dealing with the deluge of alerts that security operations teams were getting. And what ended up happening is this company could do automation, which was a big capability out there, but they could also do correlation to say not just that, if you have a low alert, process it this way, a medium alert, process this way. But if you get two lows and a medium in this pattern, sound the alarm, the whole world's about to explode. And, technically it was an incredible product by a great team. What ended up happening is a couple of the more just automation focused companies flooded the market with great marketing and messaging. I mean, they'd raised massive rounds, and where they ended up winning is their automation checked the box enough that these crazy teams that were overextended, they were happy with that and they didn't need to go to the second order problem. So that's one where, despite the market being where we thought it would be, the approach ended up being a different approach that won the market, where with that check the box versus the overly smart approach, I would say.
Well, it seems like you guys have, a very thoughtful and robust plan now around go-to-market, which makes a lot of sense because, one of my big learnings in business in general is that best product doesn't always win.
Yep.
It's product meets positioning, go-to-market. It's a balance. On today's special segment, we have Sunil Nagaraj of Ubiquity Ventures. Sunil, can you tell us a story about a portfolio company that failed and why it failed?
Yeah, I'll leave out the name of the company, but I think the lesson is it can still be pretty clear. There was a company I backed where founder, as I've said, deeply technical and deeply passionate about this particular problem. And we just raised a relatively small pre-seed round, like $1 million or something from a few investors, actually. Now, the company was humming along and they were building a product, let's say the size of, a laptop. And over time, we couldn't quite finish building the product, but new ideas kept popping in. So, hey, we're almost done with the first product, but if we add this other thing, it'll be a much more complete product and a little bit bigger. And I mean bigger in terms of features, but also size. That happened 2 or 3 or 4 times. So by the end of it, the product was eventually the size of a room instead of the size of a computer. I bring up size because to me that drives capital intensity, CapEx complexity, and likelihood of failure. And so the issue here is that we never quite finished phase 1 because it was getting increasingly difficult. This is true with a lot of deep tech problems that get asymptotically difficult towards the end. And we were swimming to the next shiny object. And most importantly, this particular founder, my assessment is that founder could never turn off the technical switch. I mentioned earlier about turning off the nerd switch and just focusing on business mode. You don't have to do that very often, maybe 5% of your time, but that never happened. So generally the answer from the founder was, I need more time in the lab. I'm going to go back to the lab. I'm going to go sort it out in the lab. And often just technical work isn't the answer. So now when I back a founder, I'm looking for founders who are deeply technical, but have the ability from time to time to completely turn that off and just be a business person and just think about, the hard-nosed organizational and customer and revenue decisions independent of technical product development.
Sunil, can that be balanced on the founding team? Can you have somebody who is 100% technical and then a co-founder that handles the commercial side?
That helps, but I don't think the notion of somebody dive bombing on a technical problem by spending more time and technology on it, that can still be fatal. So I can imagine a business again, a technical founder, but if the technical founder has a loud voice and keeps pounding, just give me 3 more weeks, just give me 3 more weeks after that, just give me 3 more weeks, like that can still drive a company to failure. So I think you need the DNA of we're innovators, but we're also disciplined innovators where we are going to pull up, wrap up, package what we've finished, even if it's not complete, and start to sell it. That's an important discipline, especially in deep tech.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.